The secondary metal sector will be travelling to Barcelona in October for the BIR's autumn convention, where they have much to consider over the tapas and the summer girls. Global economic growth is faltering and industrial production has felt the impact of this. As industry weakens, less scrap is produced, reducing availability. Additionally, as construction slows, demolition of old buildings for new also tails off, again resulting in a reduction of scrap production. Three key areas in the US, China and Europe have all struggled of late with shrinking growth, and in the case of the Eurozone, debt concerns within Greece, Italy and most recently Spain. China's most recent manufacturing PMI came in below expectations, and expectations for another interest rate cut this month may not be enough to stimulate further growth. Meanwhile, over in the US, a speech by Fed Chairman Ben Bernanke on Friday failed to announce any additional stimulus measures, although he did keep a QE3 on the table. In the Eurozone, the ongoing debt crisis shows no sign of easing anytime soon. The ECB will hold a press conference on Thursday, where focus is expected to be on government bonds. Yesterday, the ECB president dropped hints suggesting that the bank would not breach EU rules by purchasing bonds maturing in 3 years or less. Should this be implemented, there will be more liquidity injected into the market. While stimulus hopes have led to an uptick in sentiment, the underlying problems have not gone away. Coming up into autumn, primary metal prices have not been in good shape, and this is hitting the scrap sector's operating margins. Prices since the start of 2012 have struggled amid this uncertain economic outlook. Copper has been stuck around $7,600 per tonne as economic uncertainty and demand issues in China weigh. Aluminium has had an even worse price performance this year. Prices have been consistently low throughout 2012 and demand has also been weak. This has resulted in several producers either announcing cutbacks or shutdowns as the metal trades under the cost of production, hitting profit margins. While primary metal prices have added to the downturn in scrap availability and demand, the soft prices have dampened incentive to collect scrap metal to sell to scrap merchants, while on the other hand, those scrap metal merchants who purchased the metal when prices were stronger will not want to sell at a loss and will prefer to sit on the metal until prices improve. Talking of copper and aluminium then, the BIR has commissioned a study on the supply chains of these metals. Again, this is expected to be a hot topic in Barcelona. This is Kathleen Matorne for FastMarkets.